Market rallies on Friday on Apple's news, but where are we going this week? Here's what you need to know before the bell. So on Friday, Apple reported better than expected earnings, even though revenues declined on a year-over-year basis, but the market rallied very sharply, coming off that 50-day moving average, holding again that critical level of support. Ever since, really, we got above that 50-day moving average back in April of this year. So again, just over the last month or so, the market has gone absolutely nowhere despite ongoing headlines of bank failures and concerns about the economy and Fed rate hikes. All of this news impacting the markets, yet markets going nowhere at the moment. Of course, this has been a real challenge for investors because ever since the beginning of this year, going back to February, the bulk of the rally for this year, with the markets up about 8% for the year, all occurred in the month of January. Since January, the market has just continued to consolidate sideways, had a little bit of volatility here with the initial bank crisis with Silicon Valley Bank, but since then, really the market just continues to kind of grind sideways. Going through earnings season not as bad as expected. Ongoing concerns about Fed rate hikes. Very confusing here for investors. A lot of investors expecting another big downturn in the market because of all these issues in the economy, higher rates, slower economic growth. Yet another corner of the market says, hey, maybe the worst is already priced in after last year's decline, and with earnings appearing to have troughed in the fourth quarter and actually seeing an uptick in earnings in the first quarter of this year, maybe the bottom is now in for the markets. And of course, going back to what we looked at in October being the low of the market has been rallying now since October for the last 8 months or so. Markets are higher, yet the economic data continues to remain weak. So who's right, the economic data or the markets? Well, one thing to consider is that economic data tends to be both sentiment-based and backward-looking. So when you take a look at a lot of this economic data, you have to remember that a lot of that data is looking at a previous period, a previous month or a previous quarter of data. The markets tend to be forward-looking, and markets are saying maybe that economic data is weak enough. Maybe we are closer to a trough in that economic data, and markets are trying to get ahead of that potential bottoming of that economic data. That's the question. Don't have an answer for it, but that's the battle between the economic data and the markets right now. The question that you have to decide as an investor is, where are you going to be placing your money and what are you betting on? A more optimistic outcome for the economy, or are you still expecting another big downturn? That's the bet we all have to make as investors, and whoever gets the right answer will be the winner. I'm your host, Lance Roberts, and of course, that is what you need to know before the bell.